Hello everyone and welcome back to another market review. This is Silent. Today we are looking at the NASDAQ December contract for 2025. We are starting off with the weekly chart, and as you can see we did end up wicking down under that weekly candle's low, but we ended up closing above the 25,197 level. If you remember from the previous video, we were looking to see if the 25,197 level could be sustained and create a wick higher up in the weekly candle. But if price ended up seeing weakness, we would expect that low to be taken. We saw it trade under the weekly wick constant encroachment and see no strength after dropping under it, so it continued until it reached this low here and then pulled off of the low of the week. It's a good sign that we closed above the 197 level. So for next week, I'm thinking a potential of dropping down into this week's wick on the open and then trade higher. So long as we stay above the 197 level, I'm going to be keeping a bullish bias for next week. If we come above the 197 level or even the 295 level and then begin rejecting it, we're going to get a delivery through the wick here and a run under these lows potentially for next week. On the daily chart, you can see we left that daily fair value up open yesterday. We opened here on the daily candle, created a wick high, and then trade off of it. And we remained heavy throughout the entire day and then had a short-term reversal on the lower time frame. We ended up closing above that weekly wick constant encroachment after taking out all this sell side here and reaching into the bodies from this accumulation here. So we have the potential to form a swing low here and a rally up into the daily fair value gap if we can see strength inside of this wick. If we deliver through and over top of the halfway point of this wick, I'm not going to be expecting that for strength, and instead I'll be utilizing these lows as a draw on liquidity. On the 4-hour time frame, you can see that sell side liquidity is purged, so we completed the market maker sell model here, and we've already begun setting up a potential reversal. And I especially like that we closed above this 4-hour sell side imbalance just at the end of the day here. So going into next week, we could open, deliver down into the low of this sell side imbalance and then trade higher. It would be better if we stayed above the halfway point. If we can begin trading above this 4-hour mitigation block here, I would expect a similar consolidation here and a rally to the upside for a target on all of this buy side in this range here. On the 1-hour time frame, you can see the previous 3 days of price action. All of that consolidation after lunch yesterday was lined up with this mitigation block here. We stayed under it and then traded up and respected the lower half of this range going into London, and we began selling off. Trading under the Thursday low began our acceleration. That's where we get that 4-hour sell side imbalance here. Price drops heavily and then has a turning point at the lunch hour. We color over top of this 1-hour sell side imbalance in this candle here and then utilize the top of it as an immediate rebalance. And that's where we get this rally from. We open here and then drop down into the old new week opening gap, and we stayed consistently bullish going into the end of the day and closed above that 4-hour sell side imbalance here. After we open, I'm expecting just to drop down, stay in the upper half. It'll be better because this wick has already done its damage, retrading to the low. So dropping down and then rallying would be my expectation for a run on these highs. And then if we consolidate and accumulate buys inside this mitigation block, I'll be expecting a stronger rally up into all of this inefficient range here. On the 15-minute time frame, we could see how price created our Asia range lower than the previous day. So we were able to drop down and stay heavy throughout the day, and then a reversal at lunch. We retrade into the low of that 1-hour SIBI and come back above the high, treat it as support, and then we push hard into the low of that 4-hour SIBI, reaccumulate at the low end of that range again, and punch up into the high. So it was a really nice eventful day for both sides. On the 5-minute time frame, you can see how we opened after Asia and consolidated at the upper end of our Asia range and just took out buy side liquidity ever so slightly before shifting lower heavily. And every attempt to rally above was met with weakness. We sell off under this low here, and every retracement into a fair value gap after that was sold off and a prime selling opportunity. So you could be a seller here, here. Every reattempt inside this gap is a selling opportunity before it finally cascades lower. I caught a portion of this drop here. As we began showing signs of weakness inside the sell side imbalance here, I was able to take a short opportunity for a run under that old daily low. We accumulate and then reverse here, shifting above the high, drop down into this fair value gap here, and it rallies with strength, came down, retested the old new week opening gap here, and continued its rally going to the higher time frame levels and closed strong on the end of the day there. On the 1 minute time frame, all I'm doing is adding our first presentation fair value gaps. In the morning, you could see how we created that first presentation. We traded into it almost instantly and then stayed heavy throughout the entire day. Every retracement that was produced afterwards was pretty wicked and a lot of back and forth, so the safest entry for being short was this morning, right on the open, before selling into our liquidity on the higher time frame. We get our reversal and start to come back above that old new week opening gap. Going into the afternoon, we create our first presentation fair value gap here with a rally. Price does not accumulate here. We instead come down, take out some liquidity here, and return into our old new week opening gap before rallying above and consolidating and accumulating buying opportunities here before launching up and returning into our first presentation fair value gap and into that higher time frame sell side imbalance. And then a lot of back and forth until the end of the day where we rally, and then on the market on close we drop down, create a buying scenario that delivers us into the upper portion of that higher time frame fair value gap. Alright guys, so that's going to be it for me today. Hopefully you learned something. If you found anything insightful, please let me know in the comments. And as always, like and subscribe. I will see you all next week.